Hey traders, checking in on the stock market today. After an extremely strong end to last week, we have consolidation underway. Is it healthy, or is that our lower high on longer term time frames being set? I'll let you know what I think. Before we get into the technical analysis, if you want to know how I set up my chart or how Lori sets up her chart, I'll put the link in the description and the comments of this video, and you can enter your email and we'll send you a video about how we set up our charts. So the S&P 500 on the weekly time frame, I was scouting a bounce last week due to a number of factors, and most notably in the Thursday video I was talking about how essentially the bears were not invalidating anything about my thesis about looking for a weekly bounce to be playing out. So we now have the weekly bounces playing out. That being said, I am still watching the bigger picture downtrend, and this last weekly lower high on the S&P 500 is currently about 7% away from where we stand. So I'm not forgetting, in the back of my mind, I'm scouting a weekly lower high to be the result of this current bounce. That being said, I'm not confident that the top of the bounce is set just yet. I don't have enough information. So I zoom into the S&P 500 and can see that we started the trading day today with a 4-hour stair-step pattern with a higher low every single candle, 10 in a row. It broke bear into 4-hour consolidation. It's not surprising at all we consolidated today. Why? Because of how fast we ran last Friday. We ran hard, we closed at the high of the day, it was a monster bull push, but we were very overextended on a lot of time frames. And specifically the fact that we're still in a downtrend on the weekly chart. So RSI levels being overextended to the upside matter a lot more to us. At this point in time, bull flags are possible. This is a potential 4-hour bull flag, and if we want to keep it simple, we can say as long as 4-hour EMA 12 is support, a bull flag remains possible. Right now, it's a little inside bar. We would need a 15-minute trend change back to the bulls for a 4-hour higher low to be set. And then, of course, we're watching our recent high, which would have to break if this move is going to see continuation. So how we open tomorrow is going to significantly influence the direction that I am looking. If we see a higher open, we'll be watching that resistance level and potential bullish continuation. If we see a lower open, then we're opening the door for the possibility of a 4-hour lower high to be the result of the next bounce. So I'm watching that 4-hour EMA 12 support, because if it is lost, we've created more space for that potential lower high. Bigger picture, if we lose the 4-hour uptrend, we will zoom out and we will scout a daily higher low to be the result of that pullback, because the bulls will give themselves space to work with. I don't consider that we're in a daily uptrend right now. The bulls turned on the juice when we broke the FOMC high, and all those videos last week talking about how that's a very important resistance level for us, and all the thumbnails that were talking about that level, you can see why. The bulls followed through very significantly when that level broke. But we have to confirm a daily trend change, and this is why I'm keeping an eye out for bearish entries on the short term. And I think all of my day trades today were bearish, but looking for a pullback on the daily, and then whether or not bulls can follow through with bounce continuation from there. So we're not shaping up daily consolidation yet, but we're keeping an eye out for it, and that 4-hour uptrend is going to help guide us. NASDAQ slightly weaker on the pullback today. Same deal though, 4-hour EMA 12, still a possible 4-hour bull flag. We know we're in a weekly downtrend. We know we have not convincingly changed the daily trend to the bulls. So we still have to see that happen with a clear daily higher low and higher high once this bounce does top out. So in the short term, I'm watching for signs that the bounce has topped out, and then I will be scouting daily higher lows to be the result of that bounce. But one day at a time, because I have to see how much follow through we get before daily consolidation begins. The semiconductors. So one thing that we saw yesterday, or I should say last week, Friday, was a notable shift where growth names were leading the bounce Tuesday, Wednesday, Thursday, and we had laggards, we had weaker sectors, semiconductors, financial sector, IWM, those three were weaker. On Friday, our previously stronger names held on, traded, not very much upside, but they held on just fine, and the weaker sectors shot up. And so you can see SMH between Thursday with where we stood in a daily downtrend and Friday with a confirmed uptrend, high bull volume, close at the high of the day. It was a very distinct turnaround. And again, correlations, I talk about them all the time. they shift often. They shift intraday. They shift every few days sometimes. We have to be staying on top of them because the bear correlation in one day very significantly shifted into a bull correlation. That being said, on the weekly time frame, we know the semiconductors are still weak. That resistance level, S&P 500 is 7% away. Semiconductors, it's 16% away. That's a very big difference. It's still a potential weekly bear flag at this point. So not going to rule out that as a possibility. It's a different setup because we do have a daily uptrend, and that's just because we were so much weaker than the broader market that we had clear daily consolidation here where SPY and QQ did not. QQQ. SPY and the NASDAQ did not see that pullback there. So I'm watching for a weekly lower high in semiconductors. The question is, how long can bulls maintain a daily uptrend before we lose the daily high or lows and shape up a weekly lower high? Tesla, gap up open today into some profit taking. Again, when you see that strong a move from Friday and you gap up, you know hourly consolidation is going to be almost inevitable. Not every single time, especially if there's a news catalyst, but in the absence of news, keep an eye out for the hourly pullback. So that's what we got. What I'm watching for into tomorrow, can bears confirm an hourly downtrend? If they can, daily consolidation will be underway. We will zoom out and we'll scout a daily high or low, anything above 685.91. What I care most about, the most clear time frame for me on Tesla, is the 2-day chart. And I'm just viewing this as our low of the pullback, high of the bounce, higher low, pretty much a double bottom. And if we do not break 793, it's entirely possible that we remain within this tightening range for the start of July. And then, of course, how it breaks would have some significant implications, but I'm keeping an eye out for a potential lower high, anything under 793, as that resistance level is still over 5% from where we currently stand. And there's other names that are similar to this. Google is closer to breaking resistance, although it rejected today. 2387, we topped out at 2372. So same thing, if we pull back a bit more from here, it's a 2-day tightening range forming that we will look for a break of next week. Keeping in mind, next week there is no trading on Monday for July 4th. So we got Tesla, Google, CCJ, uranium, also a tightening 2-day range. Low, big high of the bounce, 40% higher. Held support, and now we're scouting a lower high, anything under 28.28. Long, drawn-out tightening range. So keeping an eye on all these names for when their ranges break. Healthcare has been a raging bull off this low. Daily stair-step pattern for 6 days. V-shaped bounce, pretty much a 10% bounce off the low. Same thing though, we haven't confirmed a daily trend change yet. So when the daily stair-step pattern breaks bearish, we must confirm the higher low and higher high if bulls are going to prove to us that this momentum can stick. But the move that we're seeing here, we're seeing XLV as our most bullish major sector. We know the biotech sector has been real strong. They often trade hand in hand, and we certainly saw that last week. So we're watching the hourly uptrend and our daily higher low stair-step pattern for indications that daily consolidation is underway, but none shaping up today. It was, again, the strongest sector that I was keeping an eye on. The financial sector, as I mentioned, was lagging behind, and the bulls showed up in a big way Friday, which really helped the broader market bulls follow through with that FOMC high resistance break. That said, just scouting a weekly lower high, anything under 35.56, that's still 10% away. It's a long ways away. So again, I can be bullish on the hourly chart and bearish on the weekly. And unless you have the same trend on all time frames, you want to have different technical analysis opinions as to most likely scenarios on different time frames. So for the financial sector, we're watching the daily higher lows. When we lose the daily higher lows, our weekly lower high is very likely set. IWM was lagging behind. Friday broke the FOMC reaction high, getting some follow through here, still well in a weekly downtrend. Again, 8% away to get to that weekly resistance level, and that's having already bounced 10%, a little bit less, 8% or so. So we're scouting a weekly lower high. Daily time frame, We'll be looking for a daily higher low to be the result of next consolidation. So essentially, I'm looking for daily consolidation in a lot of names in the short term. But then after a couple days of pullback, I'm going to be scouting daily higher lows. And you look at a name like NIO, daily consolidation has started. The correlation shifted where it was a lead bull going 60% over the last 8 days. We lost the stair-step pattern. Daily consolidation is underway. I'm no longer interested looking bullish in the short term, but I'm watching if we see hourly oversold conditions. I'm watching daily EMA 12. So I will be scouting a daily higher low on lead bulls that are now pulling back. And NIO is one of them. Other Chinese names, BABA, testing key weekly resistance. We've been watching this longer term pattern for a while now. Low, high, higher low, lower high, held short-term support, and we're testing a couple key resistances in the low 120s. If we fail from here, we will scout a daily higher low to be the result of this pullback. Baidu is very similar. Baidu's key weekly resistance, 158.63. Again, if you take the prevailing downtrend away, this is a cup and handle like setup for me. Testing 155.70. If we fail resistance this time around, we will scout a daily higher low to be the result of this consolidation. Got a baby crow being a baby. Eating a cucumber I threw out there earlier. Biotech sector. Significant bull move off the lows. Weekly lower high resistance broken. Monthly bounce underway. Nope, I take that back. It's still a monthly inside bar. NIO has a monthly bounce underway. Biotech sector not yet. I'm watching. Biotech sector has been great in both directions the last 2 days. Friday morning, all bears, 5-minute RSI hits 20. So just using our leveraged ETFs from the high of the day to the low of the day on Friday, there was an opportunity for 12%. From the low of the day to the high of the day, there was an opportunity for over 10%. Today, 5-minute RSI hit 20. In the first 20 minutes of trading, there's an opportunity of 7% for the bears. Bulls buy the dip. From there, there's an opportunity of 9% for the bulls. So we have short-term oversold conditions getting extreme to 20, but they are marking hourly higher lows, keeping bulls in control. That being said, I have a bear lean in the biotech sector over the next couple of days, scouting for daily consolidation to shape up. I'm not swinging anything, but on a daily basis, I'm keeping an eye out for a bear trade to be looking for a daily pullback. And then once it starts, just like NIO, because of the size of that bull move and the volume behind it, I will be scouting a daily higher low to be the result of that pullback. So again, it's confusing on all these different time frames. I'm looking bearish short term for a few days, then I'm looking bullish for the daily higher low. So it's important to focus on what is the most important time frame for you and the trade that you are looking for. The VIX weekly equilibrium continues to tighten. If we hold 2374, we've got our top low, lower high, higher low, lower high. Have to hold 2374 for a higher low to form. And if it does, we'll look for it to continue tightening up. If I'm a market bear, I want to see the VIX hold 2374, set a weekly higher low, and have that align with the SPY and NASDAQ weekly lower high that we're keeping an eye out for. And then, of course, we'd be looking for a break of this pattern likely in July. Though not necessarily if things get boring, but I would assume so. The US 10-year, healthy on the weekly. Potential weekly higher low trying to shape up. Still a daily downtrend, but a bear break with not much follow through straight into a daily bounce. The dollar still holding on to short-term support. If I'm a broader market bull, I really want 103.41 to break, and if it holds and the dollar bulls show up, we'll be watching for that to potentially indicate weekly lower highs in the broader market. Again, just little pieces of the puzzle in the VIX, the 10-year, the dollar. Oil daily bounce underway. Just scouting a daily lower high to be the result of this bounce. The weekly EMA 12, what a save by the bulls. It's been holding all year. The weekly uptrend remains. And if I'm a bear, I really want a weekly lower high and lower low to convincingly set this top, or at least a temporary top. So we're scouting a daily lower high to be the result of this bounce. Have to lose the 4-hour higher lows for that to be shaping up. And I don't care about oil for trading oil, but I care about oil for trading the energy sector, which has had great volatility in both directions ever since we topped out. Obviously more for the bears than the bulls recently, but some solid bounces for bulls as well. I took a short today up at this resistance. Hourly RSI was just getting towards 70. That wasn't a reason. I saw that in hindsight, but I just saw the bulls tiring. Bull break was 0 follow through, so I top fished that resistance. I think I had my stop at 74.21, so just missed getting stopped out. Was looking for a pullback to 15-minute EMA 12 after a 15-minute stair-step pattern to start the day. Scaled out into that pullback. I'm scouting an energy sector bearish entry when we see a daily lower high. There's no sign of the daily lower high. It is the most likely scenario with tons of space for it to form. It's the inverse. We're seeing a lot of inverse action between growth and energy. And that was the reason I was looking for energy to pull back and for growth to bottom. One's been a bull for 18 months. The other's been a bear for 15 months. But green energy daily bounce underway. NIO daily consolidation starts. ARC, these other growth names, daily consolidation started. We broke the low of Friday. Not much follow through, but again, to me, it's clear that they are inverse recently, and today just solidifies that a bit. So just like I'm looking for NIO daily high or low, I'm looking for an XLE daily low or high. So I'm looking bullish in one and bearish in the other, based on relative strength and weakness from last week. That's all I got. Hope you had a great weekend. We had the Chart Guys meetup, a lot of fun. 50 plus people coming into town. Lots of adventures, attached some video. Certainly was not hanging around my camera much, but got a couple shots. Appreciate everybody that came out, and looking forward to doing it again soon. Do good things. We'll see you tomorrow.
Yeah, the other channel that I watched for the swing stuff, they were saying that was a good time to start adding to that because this is hype up by, which is what you've been saying the whole time anyway.
I've given up on using an event planner after this weekend, that's for sure.
You're the arm.
Is this where we're parking now?
For now.
This is section 2.